Expectations were high that Goldman would post pretty strong results, and that's exactly what the company did. Michelle McCory has the details. Michelle?
Hi there, it's Linda. Well, Goldman Sachs posted record earnings in the second quarter after revenue from trading and underwriting reached an all-time high. Second quarter net income was $3.44 billion or $4.93 a share, and that surpassed the $3.65 per share average that was estimated by 22 analysts surveyed by Bloomberg, and it was 65% higher than last year's second quarter. But remember, a lot of this was already expected, and shares were up modestly today after soaring more than 5% yesterday. Now, according to Bollinger Band's analysis, investors should now consider selling Goldman Sachs. They say the shares may be poised to drop after breaking the higher of the two so-called Bollinger Bands. Those are lines plotted to two standard deviations above and below the 20-day moving average. And Goldman Sachs breached that upper Bollinger Band at 151.07 cents. Now, the New York-based bank last closed above that upper band on June 4th, and that move was preceded by 2 straight weeks of losses. So, according to the technical analysis by Bollinger, the stock's move up is now exhausted, and the stock is up 78% this year. Has Linda?
Well, Michelle, yesterday Goldman soared after bank analyst Meredith Whitney upgraded Goldman, so she thinks there's more upside for the stock, right?
Yeah, that's right. Well, after nearly doubling this year, Whitney thinks that Goldman shares could soar more than 25% from here to $186 a share. Now, she was spot on correct in saying that the second quarter earnings will show a big surprise to the upside. She was correct by saying that the firm has won a lot of business from the collapse of rivals Lehman Brothers and Bear Stearns. So she could be correct in calling that 186 mark as well, Huss.
She could be. And Intel came out with earnings that beat analysts' estimates. What insights do we have?
Right. Well, Intel shares also soaring in after-hours trading. Intel reported a profit, excluding one-time items, of 18 cents a share in the second quarter. That's against 28 cents a share in the same period last year. You can see they're up about almost 7% in after-hour trading. Now, do you remember that Intel did actually have a bit of a loss because they had to pay $1.4 billion to put aside a European Union fine. But excluding that one-time item, profit was lower than last year, but it still blew out analysts' expectations. And second quarter sales also beat analysts' estimates. Sales of the chip maker will be about $8.1 to $8.9 billion in the current quarter. And that's a sign that the PC market overall is recovering. Now, year to date at the close, Intel was about 15% up. And really, what investors were looking at here was gross margin. We were reporting all day earlier today that investors are focused on gross margin, and we're saying that a 51% or plus gross margin for the third quarter was what was needed to ignite the stock. Well, Intel said that gross margin will be about 53% this quarter. That was more than predicted. And as some of our reporters told you earlier, that 51% was what needed to ignite a rally, and we're seeing that rally, Huss.
All right, Michelle McCory, thank you.